Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. It is late December 2025, and if you're trying to cut through the noise to understand the essential global pivots happening right now, this is for you.
It's a really interesting time.
It is. Our mission today is to analyze this profound market paradox we're seeing. There's a massive, almost unprecedented surge in traditional safe haven assets.
Right, happening at the same time as a deeply political consolidation phase within the digital asset space. It's a real moment of tension.
Absolutely. So you've got gold and silver acting like the global economy is facing, maximum instability.
A flight to tangibility. But then you look at the crypto market, and despite these high valuations, Bitcoin is over $88,000.
Still, yeah.
It's feeling a kind of psychological lull, volatility is down, and there's a bit of fear creeping in.
Let's start right there with that paradox.
Yeah.
Because the data is fascinating. You'd think with all the institutional adoption and regulatory clarity that's finally appearing, that digital assets would be exploding.
You would.
But while Bitcoin is at, $88,470, the market sentiment score is at 29. That's deep in the fear category.
The price is strong, but the conviction behind new capital, it just seems to be missing.
So that brings us to the big question.
Is this rush into traditional stores of value signaling a deeper, systemic, global instability? Or is the crypto pause just a necessary repricing of political risk while the real infrastructure is being built?
Let's look at that traditional revival first, because the performance of precious metals in 2025 has been, nothing short of historic.
Historic is the right word. We're talking about shattering records that have stood for nearly half a century.
The one that really stands out is silver.
Yes, silver's move. It just hit a new all-time high, surpassing $71 an ounce. For context, the last time a record near that level was set was January 1980.
Wow. And that was a very different environment.
Completely different. That spike was driven by inflation, sure, but also by market manipulation, the Hunt brothers trying to corner the market. This move feels broader. It feels like a macro-driven flight from fiat currency.
And gold is right there with it.
Oh, absolutely. Gold is trading around $4,497 an ounce.
Our sources are saying it's the strongest annual growth for gold since 1979. Over 50 record-breaking sessions in 2025 alone.
It's just a huge amount of capital movement, and it's performing its textbook role, really, a safe haven. Even with President Trump's administration ending 9 conflicts, capital is still hypersensitive.
So the formal conflicts might be ending, but the anxiety about inflation, about economic stability, that's still extremely high.
Exactly.
Okay, so let's shift back to the digital side. Bitcoin at 88,470, Ethereum just over $3,000. But the hesitation is palpable. We're seeing ETF outflows of about 57.6 million.
And for anyone watching the market's health, there's one metric that is, I think, especially concerning.
Which is?
Stablecoin volume. It is the most critical, real-time indicator of trading health. When money moves into crypto, it usually goes through stablecoins like Tether, USDT.
Right.
The 24-hour volume for USDT is currently only $84.1 billion.
Okay, so why is that specific number worrisome? Especially when the price is holding so steady.
Yeah.
Isn't consolidation a good thing sometimes?
It can be, but this low volume, it signals a lack of active engagement, a lack of conviction. For us to see true, aggressive buying, the kind that drives a real rally, that 24-hour volume should be closer to $160 billion.
So it's about half of what it should be.
Half. When it's half, it implies capital is just sitting on the sidelines, or maybe being pulled out entirely. It points to some deep liquidity concerns, despite the high price.
So we have this massive dichotomy. Old money fleeing to physical metals, new digital capital just waiting.
And this is where it gets really interesting, where a strategic link starts to emerge. It ties these two worlds together.
The intersection of precious metals and critical infrastructure.
Exactly. This is a fascinating layer of complexity. China is the world leader in precious metals production, and sources say the Trump administration is watching that supply chain very, very closely.
So the question becomes, what active role can these metals play in things like Bitcoin mining or high-density data centers?
It's not just about hoarding the metal as a store of value. It's about industrial supply. High-performance computing, AI, crypto mining, it all requires specialized materials.
Gold and silver are essential for highly conductive components in advanced chips, networking hardware.
Precisely. So the ability to secure the supply of these critical elements links the traditional safe haven directly to the core infrastructure of the digital economy. It redefines the relationship. They aren't just competitors anymore, they're interdependent.
That sets the stage perfectly for the next part of this, the major political and corporate power moves happening in the U.S. Let's start with TMTG, President Trump's media company.
Yeah, this is far beyond a social media platform now. It's a major force in digital assets.
They've become a significant institutional holder of Bitcoin. They just added another 451 Bitcoin.
Which brings their total known holdings to 11,542 BTC. That's valued at over $1 billion.
And this is part of a much bigger crypto strategy, right? They hold over $2 billion in digital assets total.
And the key thing here, for you to understand the implications, is the transparency. This wasn't just a press release. This activity was publicly verifiable on the blockchain. Arcom Intelligence tracked and identified it.
It just underscores how these major political figures are now operating on a public digital ledger.
And that's just one side of their strategy. There's also this massive side note, which is that TMTG is merging with SDA Technologies. It's a $6 billion all-stock deal.
To become a premier fusion power company.
Right. They're diversifying into foundational infrastructure, long-term energy generation. It shows the strategic belief that controlling energy is going to be critical to controlling the digital future.
Okay, let's move to the regulatory side, which has always been the biggest bottleneck.
The biggest, yeah.
It seems the U.S. is finally aligning its executive branch. David Sachs is the White House Special Advisor for AI and Crypto. He's calling the new appointments a dream team for clarity.
The alignment really is unprecedented. You have Michael Selleck as the new chair of the CFTC and Paul Atkins as the new chair of the SEC.
And to understand why that's a dream team, you have to remember their traditional roles. The CFTC has historically been, well, more friendly to crypto.
More accommodating, for sure. They recognize Bitcoin as a commodity, like gold or oil.
Whereas the SEC deals with securities, which is a much heavier, more restrictive kind of oversight.
Exactly. So having both commissions led by individuals who are aligned with the goal of creating clear boundaries, it means the industry might finally get the one thing it needs most.
A consistent definition of what a digital asset actually is.
The single biggest question that institutional capital needs an answer to, and it looks like it's coming.
This regulatory momentum is being mirrored in corporate strategy, too. Coinbase is making a huge move.
A very bold, forward-looking move. They're acquiring a clearing company to expand their focus into prediction markets.
Which is a huge leap. They're moving toward becoming an everything exchange.
The plan is to let users trade on the outcomes of real-world events, elections, sports, economic data, right there on the same platform as your crypto and stocks.
And why this matters for you, the person listening, is about mainstream adoption and trust. Prediction markets have been around, but on these small, kind of confusing platforms.
Like Polymarket, yeah. You might have seen activity around the Anthony Joshua versus Jake Paul fight, but it was always niche.
Very niche.
By doing this, Coinbase brings tens of millions of users and, crucially, a regulated framework to the whole concept. It transforms it from a niche experiment into a broadly accessible financial product.
Okay, let's widen the lens. Let's look beyond the US at these massive global digital strategy pivots. You've got the EU with a very cautious controlling approach.
With the central bank digital currency, yeah.
Contrasted with the Middle East, which is an aggressive sprint into foundational tech like AI and blockchain.
Starting with the digital euro, the Council of the EU has agreed on a negotiating position to introduce it. And a key feature they're highlighting is that it's designed to work both online and offline.
Like traditional cash.
A capability that, standard cryptocurrencies still lack.
It's technologically impressive, but we can't ignore the inherent dangers.
No, you can't.
The ability for the European Central Bank to issue a CBDC also gives them the ability to track every single transaction and potentially to block it.
That is the core philosophical tension. It moves central bank power from wholesale monetary policy right into retail transaction control. We've seen precedents that worry people.
Like the freezing of accounts during the Canada trucker protests, or the issues Nigel Farage faced.
Exactly. That ability for the state to politicize access to your own money becomes a very real concern when it's all digital and centralized.
Meanwhile, the Middle East is taking a totally different path. They're skipping past consumer CBDCs and focusing on the foundational tech.
Right. Saudi Arabia, in particular, is showing real leadership in AI. They're ranked #1 in the MENA region in the Government Readiness Index for 2025.
And globally, they're ranking 7th in AI governance and 9th in public sector adoption. This is a critical pillar of their Vision 2030 strategy.
It's a serious, focused investment to become a data-driven economy, a real global competitor.
And in Abu Dhabi, the focus is intensely on blockchain infrastructure. There's a major company, Assign, collaborating with the Blockchain Center, Abu Dhabi.
This is a very strategic partnership. It's designed to bolster Abu Dhabi's digitization efforts. They want to modernize government and enterprise systems with verifiable, immutable digital records.
Assign is opening an office there by 2026.
It's a huge signal. The Gulf region is focused on using this tech for institutional efficiency and state modernization, not just retail payments. They're building a deep technological base.
Okay, so let's synthesize all this. To connect these trends, you should leave this conversation with 3 clear, interconnected takeaways that really frame the start of 2026.
First, the unprecedented surge in precious metals. That signals this deep, macro-level anxiety about global stability and currency debasement. It's real.
Second, the U.S. is rapidly establishing critical regulatory clarity with its Dream Team, right as major political players like TMTG are making massive, verifiable acquisitions of Bitcoin.
And third, that critical difference in global strategies. The EU is creating this powerful, trackable CBDC.
While key players in the Middle East are in an aggressive sprint into foundational AI and enterprise-grade blockchain, they're betting on decentralization and data, not centralized finance.
So when you look at all of that together, the regulatory clarity coming, the corporate and political adoption, the global rush into the tech, this current market lull, it feels much more like consolidation than collapse.
Which brings us to our final, provocative thought as we head into 2026. The infrastructure is being built, the rules are being written, high-level political adoption of Bitcoin is now undeniable.
All true.
So given that reality, are investors just moving capital back to gold and silver temporarily just to manage risk, until U.S. regulations fully kick in? Or does this powerful integration finally solidify Bitcoin's claim, not just as an asset, but as digital gold for the long term, making it the permanent choice for managing global risk? It's a fascinating time to watch where all that anxiety-driven capital decides to settle next.